Hi, this is Brent with another video for our chart breakdown series at Trade Therapy. We're talking about Microsoft. Microsoft was our Clarity Spotlight last week. It's a great example of using multiple different time frames in your analysis. We are looking at the all-time monthly here for Microsoft. This was taken back in June. Those of you reading and keeping up with Trade Therapy content know that right about this time period in June and July, we were looking at mega cap rotation and trying to identify areas within the charts that made sense for profit to be taken as money was rotating out of mega cap tech, which had gone on a massive run after their post-COVID pullback, and into interest rate sensitive areas of the market. We knew that monetary policy changes were coming, and it would make sense for institutions to take their profits into those areas of the market. So once again, these long time frame charts provide great insight into the overall trend and identifying areas of concern. This is the obviously all-time supply line here or resistance. We had Microsoft running into that and running into its Fibonacci 1.618 Fibonacci level after its COVID corrective period right there. So it made a lot of sense for us to expect profit taking, expect some sort of a reaccumulation type of a structure right here. Didn't see any volume concerns, don't expect to see any distribution this soon after such a strong corrective period right there. So we then took that down into a weekly time frame. We used our supply line here, our resistance. We see the end of the initial impulsive wave structure coming out of the COVID bottom. Again, we don't see any volume spikes or any concerns about distribution. So we are expecting to see at this point some sort of a three-wave structure, some sort of a corrective wave structure that follows the completion of impulsive waves like this. We picked these two targets, talk a little bit more about how we did that. We saw a lot of congestion right here. There's support right here that we thought would initially be tested. And then once price got down in here into these moving averages that would begin to flatten out right there, we thought that would be weak enough for there to be some sort of an additional move down here, chasing liquidity out of this area in the chart right there. There's also this inefficient candle right there that we think that institutions would like to cover off part of that. Pretty good support right here. We'll talk about that a little bit as we get a little further along. So we also saw some bearish divergence in momentum indicators. So at this point, all signs were pointing to some sort of a corrective move within Microsoft. Jump over to today's chart. This is what we got. Here's the yen carry trade backing off of that 1618 extension that we were just looking at. We were expecting this. Came all the way down to, it came a little bit deeper than we thought this initial wave would come down. But it did come down to the 55-week exponential moving average here. This red one undercut that a little bit. Also undercut these lows right here, which is significant because all of the people that bought this dip and went long right here with expecting a continuation of the uptrend, their stop losses would be placed right in this area right there. So they came down and took out those stop losses right there. We do see a nice formation of a AB, so A, B, C structure here. Our B wave target was bullseye, hit right on it. We see a symmetrical triangle forming here, which we talk about in trade therapy is very common when we see these up and down patterns where institutions are trying to shake people out of the trade, create confusion. That's what produces these symmetrical triangle patterns. We do have our lower target right here, this week's candle right here. It's Wednesday, October 23rd. We're halfway through the week. We do see a long wick on top of this weekly candle right here. We do talk about trade therapy content, how at the apex of these symmetrical triangles, institutions like to clear both sides of the trade. So they have come out of the top side here, possibly taking out some of the short stop losses here. If you were short, you may have your stop loss just above this supply line right here. That then opens up for them to come down here and take out all of the long stop losses underneath this. So everybody that bought the yen carry trade, their stop losses will be just below that. Be very common for Wall Street to take out both the stop losses for everybody going short, and then come down here and take out all of the stop losses for everybody going long before they continue on with their markup. We did mention this inefficient candle right here, and our low target for our ABC corrective structure here. I'm going to jump over to one of the other charts that we shared this week. You can see a little detail in how we came up with that. This is a weekly chart. Here is we ran a Fibonacci retracement here from this wave, this move right here. So it's very common when you see an impulsive wave structure like this for a corrective wave to come back and cover off 50%, so a 0.5 retracement from this high-low combination here would bring our target down just underneath this yen carry low. And cover off 50% of this inefficient candle. We also see strong support here. Again, another example of using multiple time frames to confirm your analysis. If we jump over to a monthly chart, we can see a doji right here with a couple of other months all ending at right around the same range right here. This is very strong support. So that's why we think that there's a good chance we're going to see a down move here, testing this 21 month exponential moving average right around the same area of this strong support structure right there. So that is what we were seeing in the markets when we did our analysis for clarity last week. Hope that's helpful. We'll see how it goes.